Welcome to the KBA Vendor Viewpoint podcast, where we bring together Kentucky bankers and the industry's top vendor solutions to discuss important topics that affect your bank. Here's your host, KBA Director of Membership, Products, and Services, Selina Parrish.
Today, we are excited to be featuring NContracts for third-party risk management solutions that are assisting KBA members to streamline risk, compliance, and vendor management. And with me today, I'm excited to have Rafael DeLeon, Senior Vice President of Industry Engagement, and also KBA member Cheryl Hartsell, Senior Vice President, Chief Financial Officer with First Community Bank of the Heartland in Clinton. Thank you both for being with us today. I'm going to turn it over to you, to Rafael and Cheryl. Tell us all about the great things NContracts is doing for First Community Bank.
Okay, great. Well, thank you, Selina, and thank you, Cheryl, for being here and making time for us today. I want you to know that I didn't come into this conversation cold. I did some homework on First Community Bank of the Heartland, and when I found that your bank has grown really about 40% over the past 5 years and kind of specializes in the agricultural market, but I'll get you to tell me a little bit about that in just 1 second. The other thing is, one of the things that plays into this format is we just released, NContracts just released its 2026 State of Third-Party Risk Management Survey. And one of the things it confirmed is that institutions like yours are carrying enormous, workloads and trying to do more with less, with very limited staff, often one or two, people managing, hundreds and hundreds of vendors. And I suspect some of that will sound familiar to you or your organization. So I'd like to hear in your own story, in your own words, what it looked like before NContracts, what drove your decision, what's changed, and I'll ask the questions and listen, and you can help drive that story. So let's start with you and the bank. Can you tell me a little bit about the bank and yourself and how long you've been in the position?
Sure. Thank you, Rafael. First Community Bank is a $490 million bank. We are located in far western Kentucky in Clinton. We have 11 branches. They are located in both Kentucky and Tennessee, with 5 of them in southwest Kentucky, and then 6 of them since 2015 we have opened in northwest Tennessee. We pride ourselves in being a true community bank. I know a lot of people claim they're community banks, but when you see their size, I don't see how that's possible. But we still feel we can offer everything a big bank can. As you mentioned, we have been primarily an agriculture bank, but as we have moved into these new markets, we are serving more consumers and retail customers. So we're seeing our products and services evolve a little bit. I have worked for the bank 30 years. I have started as a loan review officer. I have moved through the ranks and done everything except make loans. I recently have taken over the CFO job after serving in operations as the COO for the past 10 years. So I've done everything in the bank except make a loan. I have projects, audit, I've booked loans, I've been a teller, I've opened new accounts. I've seen everything, a little bit of HR and even some CFO duties before we had a named CFO.
Yeah. Well, there's a lot of interesting trends, that are kind of showing up that relate to your background. We're seeing a lot more people that are stepping into the C-suite area as a CFO or even as the CEO who have an operational risk background and really understanding that, what's going on there. And I think it also speaks to the fact that credit has been king in most institutions for years. But we've seen over the last 20 years that operational risk has really grown and expanded in terms of how we're dealing with things. And we're going to touch on some of that as well. By way of background, I'll just kind of share a little bit about myself. I literally have been in banking my entire life. My father was a banker, so I was running around the bank as a kid. I enjoyed being at the bank so much that I started working there in high school. And that's dating me back to 1980. So I worked at the bank for a few years, and when I was serious about going into banking, I asked my dad and the CEO, hey, what should I do from here if I want to go into banking? And he said, go work for the OCC for 3 to 5 years. Well, I didn't hear that correctly. and I stayed 32 years with the OCC. So I'm used to seeing a lot of institutions, working with institutions. I taught a lot of the directors in the director workshops that the OCC provided for the institutions it supervised. And then I retired from the OCC about 5 years ago. I've been here with NContracts. And in addition to being with NContracts, I'm also on the board of directors of a $2 billion bank that's located in Fairfax, Virginia. I live in Washington, D.C. So I'm taking, my experience from, filing checks and working in operations as a young kid to examining and the questions that I would ask out to also now, what are the questions I'm asking as a director? And so you kind of fill that great spot in terms of your background and especially your institution, because it's an institution that NContracts really targets for these smaller institutions that we can help. So let's get into the first questions. Before NContracts, how were you managing your vendor relationships, and compliance obligations? Was it spreadsheets, a different platform, manual process? Tell me about that.
Oh, it was definitely manual. We actually had an expandable file folder in our vault with all of our contracts in them. And someone within the bank was usually the primary contact for that vendor. There was no tracking of dates or really even reviewing contract terms in a organized fashion.
Yeah, and that is very typical of what we see with, a lot of banks early on that are not using a processor system. And that's that reality, those physical files, kind of what I would call that tribal institutional knowledge. There was no type of centralization. And then the problem is that when somebody leaves the bank, it kind of creates a point of failure. But also, I think one of the things you touched in there is different people were managing the vendor based on that relationship with him and not one person to look at that cohesively. And we've certainly seen that, as I mentioned, operational risk has increased as banks have used other products and systems that were outside of the core, because the core banking relationship was the only one that you really had to worry. So then, we started adding and working with more and more vendors, and we created, more risk along the way as we've kind of learned and the agency's talking about. So again, I think the NContracts really has the solution to kind of solving these things. When we started as an examiner looking at third-party risk management, I remember as an examiner thinking, how can a person or organization try to keep up with 10 vendors, much less 300 vendors, when different people are doing it, or from a spreadsheet, because it's got to be different dynamic. So what was that breaking point, the moment you knew you needed a dedicated solution?
Now, we actually had a contract with a vendor that wasn't being monitored. It was a check vendor. Whenever we figured out that this contract was costing us a lot of money, we wanted to get out of it. We wanted to switch vendors, and discovered that when nobody had been monitoring the renewal terms, the non-renewal notification dates, we were stuck. And it had just auto-renewed for another 4 years. So we pretty much had to just suck it up and just deal with it until we could get out of that contract. And that really was one of the biggest points, that somebody needs to be in charge of all of our contracts, because if I remember correctly, that was handled just by someone on the frontline staff. That contract was. There was no negotiations. There was nothing. It was just, hey, yeah, let's sign this, and nobody really monitored it after that. And it wasn't long after that, and I can't even remember the date. Seems like it's been about 15 years ago that KBA was marketing a product, or standing behind a product called NContracts. And that's just what it was. It wasn't, all these other nice modules that go along with it. It was just NContracts. And after looking at it and seeing what it could do, we felt like it would be very beneficial to us.
Yeah. And, that was really how NContracts evolved. You and Selina will remember that, when Michael Berman started reaching out. But he was dealing with the same problem himself when he was on the other side before he started NContracts, and figured out, there's got to be a better way to manage all of these contracts and also deal with the regulators who are asking questions about these contracts. But what you really mentioned there is one of the most common and costly mistakes in, community banks and in vendor management, that auto renewal trap. And a single missed notification date can cost, you 4 years of those unfavorable contract terms are getting out of that. And we've seen that we've helped institutions save real money by keeping, on top of those renewal dates. So they're just not automatically renewing. So it was pain. It wasn't theoretical. It was real pain that you were going through. So which NContracts product, you mentioned, you started with third-party risk management, our vendor solution. Which products are you using today, and which do you rely on most heavily?
Well, we actually use most of them at this point. Of course, we use NVendor, and we have added the Intelligent Contract Assistant to that, which has been very beneficial. We use InBoard, the board portal product, in continuity, in risk, in lending. We also use InComply, in findings, in Verify. Try to remember, there's not many of them that we don't use in some fashion.
Well,
as far as the ones that we really rely on, of course, NVendor, that's relied on. But as far as a day in and day out usage, is probably the board portal, the InBoard. The in lending is a very important, relied upon product because of the compliance risk associated with it.
And that also helps you with your compliance with the Community Reinvestment Act as well, correct?
Yes. And strangely enough, once we added the in-lending product and got everything set up, then we became HMDA reportable right after that. So we had to go back in and get that switched over. And again, it was very helpful to us.
Yeah. So again, and you were fortunate to, again, move into that role versus, trying to develop that, especially around HMDA and analyzing HMDA lending. And I think that is one of the key attributes I'll bring out. We've seen over the past few years that the previous administration was really focused on lending and fair lending, and we saw a lot of enforcement actions around them. I think we will still see those come up. But most importantly, this happened to one of these credit unions that, CNN did a live story about them in terms of, what did their HMDA data look? So this is publicly available data. And so that's the biggest risk most institutions face, is that somebody's analyzed the data for you and they're going to tell your story. And if you don't have a sense of what that story looks like, you're caught flat-footed. So kudos to you on that. I also agree that, with you being that the NBoard portal is probably one of the most relied upon, but it's a great proof that that value extends well beyond vendor management to our other products like this one. And being a board member and having a board solution is really helpful there. The Intelligent Contract Assistant that you mentioned, I think is really perfect for how you're looking at these. In fact, I've heard from a number of vendors as I do outreach and talk to them. Oh, we learned more from your Intelligent Contract Assistant from our bank that sent us back our contract that said, hey, it's missing these terms. And so have you been able to find terms and solutions that were not identified as part of what the FFIC was looking for?
I probably have. I can't recall that, but yeah, and one of the benefits, since you mentioned that, of NVendor is the ability to put a prospective vendor in there and run them through all of these modules or the NCA and pull all those data points out to make sure that they are all in there before you ever ink it, because that's, the majority of what I have done over my tenure is add contracts that we had already, entered into. And so if they were missing something, you just hope you catch it on the next renewal because, it's already been done.
Right. And, when you were explaining even about NVendor by itself and your original solution, this wasn't something that the examiners, it didn't sound like, were asking you. You knew you had a real pain point. It was costing you money. And so that's one of the things that I like to, really get across to community banks. These are just good business practices that really help you identify and really get to the meats and potatoes of what you're looking at, especially with contracts and avoiding those auto renewals. So vendor management is often that entry point as it was for your community bank. And has your vendor portfolio grown in complexity since you started using that platform? Are there more fintechs or cloud services that you're looking at?
Absolutely. I want to say in the beginning that when we signed up with NContracts, we were only worried about maybe 5, 6 vendors. It was our core, because we had most of our services through our core. It was our lending platform, our check vendor, our digital banking, bill pay. There were not many vendors that we really, needed to monitor. As you know, technology has just grown and relied upon so much, and we probably have, I'm sure we have, what if you get down to all the minor vendors, probably close to 150 vendors that we deal with. But there are probably 40 to 50 vendors that I would classify as critical or GLBA vendors, or some of them that I had dealt with so much in my operations world was high important vendors, that may cause you risk. And that risk may not necessarily be the risk that the examiners would be looking at as much as an inconvenience if something happened to them, or the cost, just like the check vendor, of not keeping up with the dates. So, whether it's cybersecurity risk that you're monitoring, or risk to customer data, compliance risk, financial risk, continuity risk, all of those need to be monitored and risk assessed in a way that we found out there's no one employee that can keep up with that right now.
Right. And so to that, how many employees do you have working on third-party risk management, vendor management alone?
So I'm primarily in charge of it. Of course, I have an assistant that helps with that. But then when it gets down to some of the individual vendors, that goes to the department heads. I can't know how the loan department manages their lending platform. I don't deal with it. I don't know if they struggle with it. I may know the contract terms, but I don't know the ongoing risk or even the problems they have. So and I don't have the relationship with that vendor like they have either. So when we get down into vendors like that, it then gets dispersed out to the different departments.
Yeah. And again, I think it's very typical for most community banks this size and smaller that are in situations like you are. Not only are you CFO, you're still handling third-party risk management yourself primarily. You've got help, and the tool and solution lets you, provide that help and bring on other managers. You're looking at that. So it's just makes it much easier, in terms of how you're managing. And so 5 to 10 vendors, and that you've grown over time, especially what you're looking at and all those obligations. And you mentioned a problem or a challenge there, that when something goes wrong with that vendor, you mentioned inconvenience. It's not just an inconvenience. Luckily, some of these inconveniences can just be a hiccup for a day or two. But we've seen situations where a vendor has gone down and also has impacted the bank for a week or two, that their services were gone. So we're looking at.
Right. And, when we start looking at vendors, we could do the stuff manually, whether it be our BSA compliance or our Reg E compliance. Those vendors are not required to do our daily business. But if we had to go back and do some of that stuff manually, it would hurt. And of course, if you start missing any timelines, then it becomes a huge compliance risk. So you got to make sure that, those systems are up and functioning and doing what they need to do, and that you've got a good relationship with that vendor and that they're secure. There's just a lot of attributes that go along with those kinds of vendors.
And especially right now, we're talking about AI and really asking people that you really need to start asking your vendors, as everybody's building AI into all of their products. and the cloud. And, these are clouds we were talking about maybe 4 or 5 years ago, but AI is just something we've only been talking about really for the last 2, 3 years at most, especially since generative AI has exploded. So again, that kind of highlights the risk that these risks are evolving and continuing to change, and how they're impacting any of the customers and vendors that you're dealing with.
Yeah, it seems like it was just 2 years ago we were talking about AI and, ooh, who's using AI? Oh, it's bad, And then you start finding out that, well, they've built AI into this product and it's what is helping us catch the fraud.
Right.
Okay, so that vendor we know is using AI, but then as we get to going to the conferences or watching releases and stuff with our core vendor, we're finding out that they're using it just in their CRC, or offering it to us to be able to research a question through the manuals. So right. It's out there, and I think every vendor is using it. And of course, my concentration for this cycle has been the questionnaires to get out to every one of the vendors to find out just exactly how they are using it and does it impact us and our data.
Yeah, and you're using, our solution, I think, for your tier 1 and tier 2 vendors, and we've got a way, so that really helps because we're talking about efficiency, that's where it really plays in. That sending out those either, request letters or updates that you might send out each year or quarterly, however often you do that. That gathering and assimilating takes a lot of time, finding in your email, then doing it. Now I got to evaluate that. And you're using those services, which really has helped you all of a sudden put the risk right in front of you for you to make a decision based on that risk. I'm sure that's helped you quite a bit.
Oh, it has. Even the simple credit analysis that we get on our tier 1 vendors, it would take a credit department person a good deal of time to go through that information.
Right. So what other aspects of NContracts have you and your institution found valuable?
The way that they all work together is really what draws us into adding additional modules, that they can, once you get the vendor set up, then you can put that product, that service into risk assessments. You can add it into your continuity. You can obviously use it in the compliance side. There's just so many ways that once it is built into the system that you continue to rely back onto it.
And for me, even when I came in as a new person, but understanding the product, that synergy with especially, vendor management and continuity, because those two really go hand in hand in terms of really understanding what happens if this one goes out. And I know, again, from the regulatory perspective, it was really about resilience for the institution. What do we do in these situations that we find ourselves in that either something's not working, it's that big inconvenience, but what does this mean for our customers, most importantly? So, while you're looking at this, I think the other thing that you mentioned earlier is the board portal, and it's really an underrated story that governance efficiency matters to boards and CEOs, not just compliance team. And so it really expands that conversation. Do you hear that with your board members and from, again, you're part of the C-suite, how do you view it?
Absolutely. I can't even remember how long ago it was that we took away the board books from them, the paper that we produced. Those used to be printed and mailed to them in advance, which is just hard to fathom right now that stuff was just out floating in the postal system. Now it's all put on a portal. It's put on there, days before the meeting, so they have plenty of time to review it. And they do, because they'll, come to the meeting prepared. They'll question items. And one of the things that is best about the portal is that it's not just one person who's responsible for it. It's all hands on deck. We have set it up with, and you can do this with different levels of authority to different departments, different individuals. Some of them just upload documents. Some of them can, create the agendas, whether it's the board meeting or committee meeting, or even an internal bank meeting. You can keep stuff confidential that needs to be confidential, and you can have a lot of people assisting in getting that ready for the board. And then, of course, the previous ones are archived. So if you ever need to go look back at something and see, well, what did it look like a year ago, that's accessible to them just at a few clicks.
Yes. So are there any final thoughts that you'd like to share with the audience or other CFOs or others that may be listening in about, the NContracts products that you're using?
Oh, absolutely. One of the things that I can't stress enough is how much NContracts and their employees are willing to assist. We have our first dedicated risk officer. We actually started setting up in risk prior to having a dedicated risk officer. And so now that he wasn't at the initial training, he has watched the webinars, joined the live webinars or watched the recorded ones, reached out for assistance. And, you've got the product owners or experts who are immediately communicating back to him and telling him, I'm here to help you, whatever you need. That's not typical in a lot of stuff. Once they, onboard you, they kind of, you're on your own. Of course, there's the community where you can communicate. There's the product updates on monthly basis. And I appreciate the fact, I have a lot of items on my calendar. So the fact that I can sign up for it, and then if I have a conflict, it's recorded and the link is available to me, and I can go back and watch it, a few days later. And if you're learning or wanting to, work on something, you can pull that webinar up or the how-tos. You can, pause it. You can work on it on different screens, and it's just very valuable.
I think that's one of the things that I've seen here at NContracts since I've been here, the passion that we have for community banks and their survival. So that's that aspect, making sure that we've got great customer service. We're not just selling a product and you have it and then we're gone. We've got that customer service that is willing to step in and help, get a new dedicated risk officer set up so they really understand how that product works. But even when there's turnover in the ranks, I often tell, executives when they're talking about it, like, well, we're not using it as much. And I'm like, did you have a change? Yeah, we have a new person on there, but they're not sure how to use it. Well, let's get them training. And they don't realize a lot of times that we're offering that. You got a new person, or sometimes there's just so many new things going on. I need a refresher or update. So I think those things are great. One last question, I will kind of say this. There's a number of community banks that kind of say, that are your size, around 500 million. We're too small to really use NRisk. What would you tell them from using NRisk so far?
Well, as you have talked about the synergy or just, having everything in one place, risk assessments evolve as well. And you need to have a good platform to get the data that you need to update yours, whether it be, now we need an AI risk assessment. Okay, well, there's examples out there. Or just putting it all together. I mean, just like the vendor contracts were in the beginning, the risk assessments were with each department. The BSA does their risk assessment. The ACH does their risk assessment. Well, where are they housed at? Well, this one's saved here. This one's saved here. But they don't all go together into the total risk that the bank is willing to accept. And that's the good thing about NRisk is when you get all that in there, the synergy, as you said, it puts it all together and it really lets you see what kind of risk appetite you have and where it's coming from.
Right. Well, Cheryl, I really want to thank you, and I want to be direct with you that this is exactly the kind of conversation I was hoping for. You've described something that a lot of community bank leaders talk to me about and are living right now in terms of their challenges, and struggling to articulate. There's the pressure of, as I talked about at the beginning, doing more with less, especially in a regulatory environment that is changing, and most institutions are afraid of being caught in this whipsaw. It goes to the left, it moves to the right. Where is that happening? But, as our latest survey has really shown on third-party risk management, institutions that are pulling ahead aren't necessarily the biggest or the largest or the best research. They're the ones that really invested in infrastructure to begin with early on and having the right tools like you've done. So based on, what you've done, you're telling your story, and I think it's a great one. So thank you, Cheryl. The conversation is going to help a lot of bankers who really need to hear it. So thank you today.
Thank you. I'm glad to help.
Thank you, Rafael and Cheryl. What a great conversation and such great information. And it clearly shows us that community bank staff are wearing so many hats, but what peace of mind it is to know that NContracts is there helping us. And so hopefully all those listening will reach out to Rafael. But there is more information on KBA's website for NContracts, so check out kybanks.com. And until next time, this podcast is a wrap. Have a great day, everyone.